Good afternoon. This is Chris Robinson, Robinson Ag Marketing with today's post-close grain and livestock comments for Thursday the 2nd, October 2nd, 2025. Um, Barring really any big news, we did get a couple of things to really talk about. Secretary Bissett said some sort of announcement will be made on Tuesday regarding freeing up money for soybean farmers. If you dig into it right now, there's $5 billion sitting there right now, but that fund does have the ability to replenish up to 30 billion for next year. I think that got some guys, at least you had some short covering today on that news. The other item, no new tweets about President Trump's meeting with Chairman Xi, but again, that's not for 4 weeks, which brings us into the beginning of November. So there's a lot of time there. A month is at least 20 business days. Are we going to have 20 tweets between now and then to keep the soybean market buoyed up? It is nice that we've had a good recovery. In my opinion, it's just very technical. We don't really get, I think, you really won't start turning heads in November beans until we get above about 1030. If you look at my letter, if you look at my information, there's a 100-day and 200-day moving average right there. And we need to get above that. The 200-day average, if we're able to get above it and settle above it, that could entice some of the longer term trend following money programs to get long because anybody that has studied this marketing for a long time knows that that's been a historical key area for them. The long term. I'm not talking about the day traders and the HFTs and the guys that chase every last half cent move, but the longer term trend followers that they get in and they get out on big signals, the 200-day moving average would be key. So I'm hopeful. I'm not cautiously bullish. I'm not insanely bullish, but I would think that's something you want to continue to look at there from a producing standpoint. I mean, let's face it. 2 days ago on that report, we were down at 993. So to be at 1023, I'll take it. I don't care about the reasons. I want to make sure that we use it though as producers. December corn finished up 5.25 cents at 421 and 3/4. Again, we can't really get excited about these corn until we get past the July 4th gap up there at 432, 433. Um, can we get for 440? I sure hope so. We've got cash sales waiting to rip off there at 439. So all I can say is come and get it, Mr. Market. The wheat did manage a higher close on the day, up 5.5 cents, 514 and 3/4. Again, if you look at my the daily letter, you know that yesterday was a contract low. Chicago D's traded 502. Back in June on our highs, we were at 616. So the big slide is still there. It's nice to see a bounce. We did see a little bit of a bounce in meal as well. Some guys are, if I'm a meal user, I did want to say that. If I'm a meal user, we're at 9 year, 10 year, 12 year lows down here. You absolutely positively want to be looking at cheap calls because when and if this market turns, and those are the key words, when and if it turns, you're going to want these calls on. So use these dips, use these levels to get some defensive positions on so that in case we do rally, you're in front of that move. That's why we hedge. It's different than a trade. It's a hedge. It's defensive. So if you know you're going to use a lot of meal next year and we're sitting down here at these 12-year lows, I don't know why you wouldn't take a look at doing a call spread or a call. You have a limited risk. Okay, define limited risk with if you don't do the call spread, you've got unlimited profit. If you do the call spread, you have a limited profit. But as long as you're doing hedges where you're setting yourself up for a 4-to-1 or better payoff, it's a really good time to start looking at doing those hedges. I can't say that enough. Any end user right now of wheat or soybean meal, you need to be getting aggressive because if we do turn the corner here sometime in the next 3 to 6 months, we don't want to be looking back saying, "Oh wow, who knew?" And then that's the answer to the question is nobody knew. Nobody knows. That's why we hedge. So again, a good recovery. I can't really get excited about beans until we get above 1030, 1040. If you're following along with my program, you know that we've got cash sale targets above there, ready, willing, and ready to go. So I hope we get there. This has been a good development after really what was a nasty USDA with bigger numbers for corn and bigger numbers for wheat. So when you get a bounce after a really bearish report, it's a blessing. Take advantage of it. That's all I can say. If you're looking at moving over in here now to the protein complex, live cattle, feeder cattle, hogs, all lower across the day. Cash cattle has been trading lower really on a steady basis really for the last 6 weeks. You're starting to see a little bit of downward movement and cutouts and so forth with the hogs as well. After again, we had a really friendly pig report last Thursday, and we'll see. You know, there's a lot of downside risk I think in lean hogs here right now. We did go sub 86 today in Dees, but again, even at 86, 87, we finished here at 86.70. You know, you got to look at where we were. We were down at, 67 cents. So you're still 20 cents north of that April tariff low. Defend it, defend it, defend it. Nobody sells the high. If you don't have anything on the books, get something on the books. November feeder cattle finished down 520, about a buck and a half off the lows, but it was definitely under pressure. The announcement this morning, or it wasn't like an announcement, it was a tweet from an official in Mexico that, in his opinion, the border would be open in the next month. That put pressure on feeders, because if that cattle starts coming back up from Mexico, that's going to take some of the pressure off of tight supplies. I will say this: we still have continued reports of the screwworm. I looked at some information before I sat down here. We've had a 32% increase since mid-November. Excuse me, yeah, since the border was closed. We've had 6,700 cases in Mexico. So I guess these guys think that in the next month they're going to get a handle on the screwworm. But right now, I think the thing that really turned to sellers today was one person's tweet saying that he thought the border would be open again in a month. So no matter how you cut it, there's certainly a lot of revenue there still left to be protected. There's a lot of meat on that bone. And as far as what's going to be going on here with the row crops, the proof's in the pudding. 30 cents is great. We've been in a dollar trading range all year, from basically about 10.70 down to 9.70. So, 2 days ago we were at 9.93. It looked like we were going back down to 9.70. And so to be up here at 10.25, it's a blessing. I'd rather see somebody sell into a 35-cent rally than wait and do nothing. So if you can't sell into the rally, get yourself a cheap hedge. You can do these weekly options now. That might make sense to you. If you know you're going to store it, absolutely, positively, go out and, price some hedges out through January or March. Generally, the basis gets better after the first of the year anyhow. So that may be something that we're going to look at here. And of course, all cards are on the table if we ever did get an agreement with China. At the end of the day, it's a math problem. We grow 4 billion bushels of soybeans for 25 years. China's taken 25% of that. They have been sitting on their hands, and that's why we're in the situation we're in. So we'll see Tuesday if the government sends out checks to support farmers, because this lack of demand is no fault of the farmers. All right, guys, have a good rest of the night. If you haven't signed up for my weekly private member podcast, go ahead and do that. Once you sign up, it's there on the website. You can listen to it anytime you want. You can go back and listen. Basically, what I do is take about 15, 20 minutes and do like a mini class. I try to explain to you exactly what I'm looking at. A lot of what I do is chart-based, and it gives me a chance to actually talk and explain. And it also gives you a chance to slow it down, stop it, freeze frame it, look at it, and then ask me questions. So hopefully you like it. Sign up for it, and look forward to hearing from you. This is Chris Robinson, 312-638-8868. Have a great rest of the night, and take care.